Amazon is down 2.5% after hours. That must mean one thing. They missed on earnings and revenue. Mo, what did they do?
Amazon earnings per share. Expectation was $1.33 per share. They came in at $1.68.
So they crushed.
Revenue expectation was $162.1 billion. They came in at $167.7 billion.
And by the way, that's a crush for $160 billion in revenue.
A lot of billions.
You know, today was an interesting day. Microsoft and Meta both crushed yesterday. And the NASDAQ pre-market, and even at the beginning of the day, was up like 1.4%. We're also going to cover Apple today, but they don't report for a few more minutes. So we're going to get to it when we get that. But then the NASDAQ finished down today, Mo. It finished down. Like, I literally was absolutely full. I kept seeing it all day, like, just decline.
Wasn't it up like, didn't it start the day almost 1.5%? It was like 1.34%.
Yes. It was like 1.46 pre-market.
Oh, wow.
Here's the day today on the NASDAQ. Here's QQQ. I'm so glad we have the intraday now. Look at this. Just, you know, a steady, little rebound kind of thing. Mo, tell us more about this Amazon report.
Yeah, so net sales increased 13%.
Wow.
Yes. Operating income increased to $19.2 billion in the second quarter compared to $14.7 in the second quarter of 2024. Free cash flow decreased to $18.2 billion in the trailing 12 months compared to $53 billion for the trailing 12 months ending in June 30th, 2024. That's a big drop. Is that not a huge drop?
That is a big drop.
Okay.
Say that again. Repeat that one more time.
Free cash flow decreased to $18.2 billion for the trailing 12 months compared to $53 billion.
Yeah, it's a big drop. Now, here's the deal. Amazon, and this is what I got wrong about Amazon for many years. Amazon's capital expenditures wildly fluctuate. Jeff Bezos has done a great job of getting people to think long-term and not think about the short-term profit. He's never cared about the profit. It helps that he was doing this during a booming bull market. If it wasn't during a booming bull market, people might have been much quicker to punish Amazon. But they've done a great job. So I shouldn't guarantee. I'm thinking that their decrease in free cash flow is because of a massive increase in capital expenditures. To do what they want to do, they have to build out a lot of infrastructure, distribution centers, et cetera. Mm-hmm. They've got to absolutely do that. They're now down almost 3%. And go ahead.
This one surprised me. It was the biggest Prime Day ever. Now, was it 4 days versus 2 days?
That's the other thing.
Is it? Is that what it was?
Yes. And I think it was you and Dalton were like messaging me. You and Dalton were messaging me like, oh my God, Amazon Prime Day sales were down like 80%. I'm like, because they added 2 more days. They doubled the number of days.
I would like to see theirs versus Walmart's though, because they shared the same days.
4 days like Walmart?
4 days, yeah.
Wow, why is Dalton not reacting to my shit talking?
Probably reading about a commodity.
He's probably reading about a commodity.
This is interesting. They announced a Nike storefront on Amazon.com.
Yes, because so remember, like Nike was off of Amazon, and they're bringing it back, and they're starting to do these things. I mean, you can buy Rolexes on Amazon. You can do everything on Amazon.
They launched generative AI tools, of course.
Of course.
They're going to have some NASCAR stuff on there.
NASCAR?
Cool.
For the win.
Cool.
All right, so guys, Amazon's interesting, because look at this on Amazon. This is the 5-year chart, and Amazon is up 48% in the last 5 years. That's not good compared to the market.
Not a lot.
And in fact, look at it this way. Let's go look at 5 years ago. 5 years ago, it was about, call it 170. Guys, it was at 170 merely 3 or 4 months ago. So for 4 years and 9 months, it went nowhere. Am I cherry picking? Yes, but that's the point. The point of cherry picking, for those of you who are new to either our channel or investing, is I want to show long periods of time in which incredible businesses that were very popular had no movement. Because it has to tell you something. Why would a company that in 5 years, revenue and profit have skyrocketed, yet they have 4.5 year, I can look at a 4.5 year period of time and the stock went nowhere. The reason being is that price and value are constantly misaligned. You shouldn't take it to mean that the company was bad because this was happening. And it's very easy to think that way. And I do not blame you for thinking that way if you do. The good news is you realize now that in the short run, stocks are a voting machine. In the long run, they're a weighing machine. And if Amazon, hypothetically, I'm not going to dictate it, was fair valued here, I don't know what the chart's going to look like for the next 10 years. But if you told me they're going to 10x their profit from here to 10 years from now, where do you think the stock would go?
Minimum 10 times.
Probably 10 times. No, not minimum. I mean, if there's a contraction of PE or something like that, it could be less. But if you pick 30 or 40 stocks in a normalized market, if the profit is up 10 times and you pay a reasonable price, the stock will be up 10. If the company's fundamentals are up 10 times, the stock will probably go up 10x as well. And this is very important. I cherry pick on purpose. It is done purely to say, guys, 4.5 years for a company that couldn't miss for a long time is a long period of time, especially for a company that continually just keeps on crushing their earnings and profit. Don't you think, Mo?
Yeah.
Now, what I'm actually honestly shocked to see, we only have 18 members of our community who voted on Amazon. That's it.
It's probably because it's so overvalued that they're just like, we won't even look at this.
Maybe. I don't know. Although, funny thing is, strong buy is 39%. Buy and strong buy is 55%.
That surprises me.
So if you're part of our community, please go in.
Go do it.
Please rate. And don't forget, if you don't know enough to rate, just write that in there. We want to know this. We take this data to also understand what our users are doing. So go in there, vote on your position on Amazon. Mo, anything else of note in the earnings release?
So looking at the going forward, third quarter guidance, net sales expected to be $174 billion. That's big. That's big growth. Again, operating income $15.5 billion. That's really about it. They have a press conference in 47 minutes from now. So we'll see. But that was really it. Now, web services, that was an important one. Web services reported net sales of $30.9 billion, beating expectations of $30.8. So not necessarily a crush in that department, but pretty good.
Yeah. I mean, listen, Amazon's changed every single person's life in this world. I don't care what anybody says. If you live in the United States of America and you use Amazon, your life is very different than it was before Amazon.
I was shocked to hear people that don't use Amazon.
First
Number
off,
two, don't have Prime.
You want to hear something else? I once had an Amazon delivery driver tell me he's never used Amazon to buy something. And this was not 20 years ago. We're talking about like in the last year. I was in the new house. Oh, it's absolutely insane.
How's that possible?
That's sociopath behavior right there.
Yeah, that's just being resistant for resistance sake.
I wonder how much I spend on Amazon every year.
You can definitely go and look.
I can look.
You can absolutely go and look.
Well, what do you estimate you spend a year on Amazon?
Oh, man.
Remember, I'm buying business things as well as personal things. I'm not just buying personal stuff.
I don't know.
Well, you know, I keep track of all my expenditures, so I think I pretty much know.
Oh, you know what? I can actually get. What do you spend?
Including business things, between $4,000 and $5,000 a month.
Okay.
It includes business things, though. And business stuff, when I buy it, it's like laptops, it's like speakers.
How much for personal stuff would you say?
$2,000 to $2,500 a month.
Okay.
Yeah,
so like
about half.
Okay.
We budget for about. But remember, it's not like I'm buying stuff on Amazon that I wouldn't have bought elsewhere. It's more like, paper towels and things like that. That we're just like, we're not at the store, let's just order this. Or it's like, I'm going on a trip in 5 days somewhere and I didn't want to pack my good underwear, so I bought crap underwear. I just went on Amazon and literally went and found like
Amazon
Hanes.
Basics.
No, Hanes was actually cheaper. It was like 12 pair for like $20.
Wow.
Yeah, but by the way, they're awful. But the point is, like, it's just like, okay, but I'm going to be on this trip, so I don't care. So anyways, Amazon is incredible.
Amazon Basics clothing.
Essentials, Amazon Essentials. It's awesome. Their shorts are like $20. They're khaki shorts. You can't. When I'm wearing them, I can't tell if I'm wearing J. Crew or Amazon. That's the God's honest truth. One's $20 and one's $78.
Never tried them.
Oh, you got to do it.
Never tried anything.
Oh my! You've never tried it?
Any essentials? No, never tried any essentials.
Man, they're awesome.
I always wondered about the fit.
You see me. Have you ever noticed anything you thought that didn't fit me well?
No.
It was all Amazon.
No. All right, maybe I'll try something.
It's just great.
I'll try some pants.
Plus, you know what? If you don't like them, you donate them. It's $20.
That's true.
You'll survive, Mo.
That's true.
All right. So the question we have to ask ourselves is, what's Amazon worth to us? Analysts expect Amazon, oh my God, look at this EPS growth, doubling in the next 4 years, Mo.
Dang.
$6.30 to $13.90. That's more than double. Wowza. Revenue growth, 8 to 11%. Man, a company with $650 billion in freaking revenue, and they're still able to grow their revenue that much. So what is Amazon worth? Now, what's interesting about Amazon also is, and I blame I don't know if they changed the way in which they reported their cost of goods sold, but Morningstar would tell us their cost of goods, their gross profit, which means the revenue minus the direct cost to sell that was like 18%. And now it's like, oh no, it's 50%. It's like, and you know what? I feel bad because I had people tell me like, listen, they'd be like, Paul, no, their gross margin is 40 to 50. I'm like, I'm looking at the financials here and it says 18, but now they're back up to 50. So Mo, 10-year analysis.
Okay.
4, 10, and 10% revenue growth. Now keep in mind,
I mean, it's a $2.5 trillion company.
Yeah.
So it's fine.
I focus more on the $650 billion in revenue. Guys, keep in mind, what we're doing here with Stock Analyzer is merging the story and the numbers together to find a reasonable price to pay for the company. That's it. And we do low, middle, and high assumptions. And I'm doing a 10-year analysis. Profit margin. I did 6, 9, and 12. And keep in mind, they just did 10. I'm not going to focus on free cash flow here because of how
much.
How much they, like how wild it is.
It's so funny. So in the guys chat today, they sent me something about Amazon's doing some crazy AI. And I'm like, it's amazing how much stuff they throw at the wall and just to see what sticks.
So I like Jeff Bezos'.
I'm looking at this list right here of all their new stuff. It's like,
well, you know Jeff Bezos' mentality. His mentality is try it because he's like, listen, there's two kind of decisions you make. One where you go through the door and go, oops, wrong door, and you walk right back out. He goes, those decisions should be made quickly and go try it. The decisions that if you go through the door, you die if you're not right, those are the decisions you spend a lot of time on.
Yeah.
How many decisions can Amazon make that's really going to bury the business?
Not a lot.
Right. So it's like, okay, they're going to make a lot of decisions. Profit margin, 6, 9, and 12. What'd you think?
Good. I like it.
Okay. PE, 20, 23, 26.
I think that's good.
I will say something about the profit margin.
Okay.
If their gross margin really is 49%, that's pretty low.
It is.
But they have a lot of warehouses and things like that.
There's a lot that could go wrong. I mean,
desired return, I did 9%. Guys, oh my gosh.
That's what I'm looking at.
Now
this
it's down
shaking my
4%.
head, and I'm looking at this going, I have the press release in front of me. The company hasn't said anything yet. Why is this a negative? Like, what's the rationale behind it?
There's no rationale.
I would like to know that.
Guys, when I do my 9% desired return, that is not the price I'm buying the company at. I need to have margin of safety. To get margin of safety, you got to have this return be higher than 9%. But 9 or 10% is about the market return. So that's what I put to figure out what is this company worth in the market? A fair value in the market. I hit the analyze button. The stock's currently at 225. Mo, any guesses on what our low, middle, and high numbers will be?
Oh, jeez.
Please guess. This will be fun.
I think it's going to be around like $105 a share in the middle.
In the middle?
In the middle. Oh, wow.
71 in the low.
That was way off.
275 in the high. 150 in the middle.
Okay.
So it still has some room to go here in terms of getting back to some sort of value that makes sense. What is the 52-week low? How low did we get in 52 weeks? 150.
Wow.
So pretty close to it.
Yeah. Yeah. Okay. Interesting.
All right. Now, here's Apple's info. And here is Apple, guys. Apple was estimated to bring in $88.94 billion. Holy cow.
That's a lot.
They brought in $94 billion. Estimated to make $1.42. They brought in $1.57. Those are some pretty solid beats, especially, and the company's being rewarded 2% after hours, which is kind of interesting because Amazon had a very similar kind of beat, wouldn't you say? 3.5%, 26%. Yeah, I mean, it's not as good. It was better on the earnings per share. That's incredible. 2.5%. Mo, what are you reading? Do you have anything on their website yet?
Not yet.
Okay, so let's look at Apple today. Apple 5-year chart up 100%. Just steady, tried and true. I was talking to Dalton yesterday about Apple, guys. And by the way, we have 26 community members. Another low one. I'm actually surprised by this. Maybe they just don't report. Maybe they just don't vote on the really big companies. I don't know.
Yeah.
The average is a hold on Apple, which I'm kind of surprised about because Apple feels like one of the more reasonably priced Magnificent Seven stocks because the growth story isn't there anymore. It's not super exciting for growth. Although, you know, it is super exciting. $100 billion in free cash flow is an average for the last 5 years. Guys.
Sounds make-believe.
It does sound make-believe, doesn't it? $100 billion. That means that like 20 or 25 years from now, there are going to be companies that generate literally trillions of dollars a year in free cash flow. And if you ask Kathy Wood, it's going to be Tesla.
Still doing that?
All right, Mo, what do you see, buddy?
All right. Product sales, 233 233 billion versus 224 billion looking at last year, of course. Services, 80.4 billion versus 71.2 billion. I mean, everything is better.
So what did they do this quarter?
Everything is better. Let's see.
What was the quarter number?
Let's see
what was it? 94 billion?
94 billion, yeah.
And last year's quarter was 85.78. Crust. That's a big beat for a big company like that. That's a big increase.
Yeah.
2 years ago, 81.8 billion. And the services is big. Why are services so important, Mo?
I think it's going to become a service-based company. I mean, of course, they're always going to sell hardware.
Of course.
But I think that service is really where it's going to come into play.
And what's so good about services?
There's not a lot of cost behind it.
Super high margin.
Yeah.
How much does it cost to sell one Apple One membership?
Probably really close to nothing.
Yeah, I mean, or at least the operations of it.
Versus selling an iPhone.
Yeah, that's exactly it. And these are the things you have to think about with companies. Like, you look at Apple and you see a profit margin here over the last 5, 10, 1 year. You're looking at low to mid 20s, 23 to 25%. And let's say services became half their business. That's going to grow.
Yeah.
Because if you have half your business making 50% margin and the other half if half your business is making 40% margin, the other half is making 80% margin, overall it's a 60% margin business. That would really drive the bottom line here. That's the growth play for Apple. Apple's not going to grow by absolutely skyrocketing revenue 20, 30% a year. They're going to grow by changing the mix of their revenue. Still keep hardware and use software sales and subscription sales to sit there and supplement all this Apple universe that you're part of, right?
Yeah.
Like if you're like Mo and you live in the Apple universe.
I like it.
I like it too.
Yeah.
I don't do the laptops. I don't like their computers.
So today, Apple is proud to report, this is from Tim Cook, June quarter record revenue, double-digit growth in iPhone, which is interesting. Everyone was saying that iPhone wasn't going to happen. They have double-digit growth, and Mac and services, of course. But iPhone's always the thing. Like, I bet if you go watch CNBC right now or later on today, it's going to be everything about iPhone. Can they do better on iPhone?
Well, I mean, so you got to remember when products first come out, and like Apple, they come out with their phone, and cell phones are starting to come out. It takes a while before you get the market leader. I think we have the market leader in phones.
Yep.
The question is, what would it take to throw that market leader overboard?
I mean, I don't necessarily know of anything that's coming super close right now.
Well, nothing's coming super close right now, but that's the point. We don't know what it is.
Good, I don't know.
But I think that's why Apple's smart by doing subscriptions and software, because it's going to allow them to keep people in that Apple community.
Maybe it'll be a Tesla phone, and Tesla will be a phone company. And all of us were wrong. It's not a car company or a tech company. It's a phone company.
Electric phones. It's brand new. Right now, the gas-powered phones that you have are taking up too much space.
What if they did gas-powered
That
phones?
would be incredible. Tesla pivots to a gas-powered phone, and they stick to electric vehicles.
There we go. I think we figured this out. I think we figured out how we get to a 70 PE.
We're going to go back to, remember back in the old days, like the car phones were like these huge boxes? It's going to be the same thing. We're going to be like, you're going to be sitting there starting your cell phone. Like, okay, there'll be no cell phone usage inside, or else you might die from carbon monoxide. What's the when you put your car on in the garage? What's that called? Okay. Yeah. I don't recommend anybody do that. Yeah. All right, so
definitely not while watching this.
Let's check out analyst estimates.
All right.
$7.31 a share, going to $12.46. Look at these growth rates: 7%, 9%, 10%, 21, 18% growth rate on earnings per share. My guess is revenue is very low. Not as low as I thought. 4, 6, 6, 9.6, 7.8. Where's this 9.6 outlier coming from?
Yeah, I always wonder where those come from.
Guys, they're analysts. They have their biases. Biases or biases?
I always thought it was biases.
I think it's biases.
So.
Either way. Mo, here are my assumptions on Apple. What are your thoughts? 3, 5, and 7% revenue growth.
Yeah, it could be a little low, but I don't.
Okay. What about 3, 6, and 9?
Yeah, try that.
Okay. 3, 6, 9. Okay.
Damn, you're fine.
Profit margin. Yeah, that's what I wanted. I'm going to stick with the same free cash flow and gross profit. I'm going to do 24, 26.5, and 29. And Mo, remember, I'm assuming I'm giving them that value on the...
Go to subscriptions.
Yes, subscriptions are going to drive a lot more margin here. Okay. Now, what's the PE for Apple? You know, Warren Buffett has a great comment about Apple. He goes, listen, if you told somebody right now, you can lose your car for a year or lose your iPhone for a year, which one are you picking?
Your car.
And he goes, tons of people are picking their car. Does that garner a much higher PE here than, I mean, doesn't that justify a much higher PE?
Yeah. What are you going to put?
I'm going to stick to 2023 and 26, but fully acknowledging that could be very low.
Yeah, that's true.
Fully acknowledging that could be very low. And my 9% desired return, hit the analyze button. And guys, before I go, it's time for Senseless Plug time. This software right here, this is our most popular tool. It's used over 1 million times per year, but there's so much more to the site. Everything up here has tools, has content. We have exclusive content, hundreds of videos. We have community chat. We have so much going on, but more importantly, this community is thousands of like-minded investors who don't chase shiny objects. They're here to learn. They're here to get better. They're here to become better investors. They don't agree on everything, but they think in a similar way. If that's you, join the community, 7-day trial, click the link below. If that's not you, please stay the F away from us. We want to have nothing to do with you. Please stay away. Go harass somebody else who cares about the next shiny thing that you're excited about. But if you're more like us, please join us. We want you. Hit the analyze button. Oh yeah, click the link below. All right, Mo, 115 on the low side, 270 high side, 177 in the middle. Okay. I don't know why I have it on my watch list at 110, but I'm going to change that to
160.
160 just to start taking a look at it. And we'll see what happens. So guys, thank you very much for your time. These are always exciting. Don't forget, don't just follow earnings on the quarterly basis. We're here to teach a long-term process. Thank you.